Okay, everybody, it's me, Gregory Mannarino. It is Friday, September 9th, 2022. Do you know what just happened? Do you have any idea? Well, maybe you do. This is pretty incredible, and the market is loving it like you cannot believe. Stock futures higher across the board. What am I talking about? Well, the European Central Bank, let me get this right here, is stating that it is ready to supply liquidity to the banks. Well, what does that sound like to you? Banks are going to get recapitalized. And let me allow you to understand something else here, people. The Federal Reserve, as always, ECB and the Federal Reserve, lockstep, will follow suit. The Federal Reserve is also going to reliquify banks. In other words, bail them out. Look, it's interesting how they word these things. Imagine, for example, if the European Central Bank or the Federal Reserve were to go out on national television, international television, and say, hey guys, guess what? If they said, then people across the board. You and I realize since weeks and weeks ago that central banks would do more. Here, in my opinion, is part of that mechanism here. Now, let's look at the 10-year yield. It's 3.25 this morning, okay, 3.25. As I explained yesterday, I've been telling you this for a while, it's not so much what that number really is, honestly. It's the pace at how fast global bond yields are rising. The 10-year yield is rising. Now, on the back of this new news about the ECB standing ready to, reliquify the banks, supply liquidity to the banks, the US dollar has reversed. It is sharply lower. Now, as you all know, there is a compensatory mechanism that exists between the 10-year yield and the dollar. So even though we have that 10-year yield sitting at 3.25 right now, which is not necessarily a bad thing, as I explained, it's about stability. The market wants to see stability here. So with the 10-year yield sitting at 3.25 and that weaker dollar, the market might actually be okay. As I explained, I just said this yesterday. Let's see how that plays out. The market can absolutely tolerate a higher 10-year yield as long as it remains stable. We don't get this yo-yo effect with bond yields. Bond yields are not meant to act like yo-yos. They're supposed to stay stable. Stable. You understand? And for that matter, so are currencies. But there's another phenomenon that's going on with regard to global currencies, which you all know about, and that is a race to the bottom. Central banks are determined to kill their currencies in their current form. And along with that, wipe out an entire class of people, period, and make their lives harder by creating inflation. You know that. At least I hope you do. And this knee-jerk higher that we've seen for quite a while now, no surprise, we discussed it right here on this blog of that dollar rising and rising and rising. Well, look, if in fact, let's just say, we have to give kudos where kudos or credit is due here. The European Central Bank has admitted what they're doing. They're buying debt across the entire Eurozone. They're buying it all. The Federal Reserve has never admitted that, but they're doing the same thing. The European Central Bank stating specifically they stand ready to supply liquidity to the banks. Okay? At least they're telling people that. People aren't going to understand what it means because of the wording, but the Fed will follow suit. So however you want to look at this is backdoor bailouts. Yet again, you and I realize, look, the banks are not going to be allowed to fail here anymore. The people are going to be allowed to fail. By a central bank, any central bank, especially the European Central Bank and the Federal Reserve, standing ready to supply liquidity to banks. So that's massively inflationary. They create this cash out of thin air and then they dole it out. Bang, bang, billions, hundreds of billions, which is, inflationary. But you're not supposed to know these things. No, it's a big secret. So let's not tell anybody. You and me, let's keep this between us, I mean, come on. It's too freaking asinine here. And I sincerely believe this, people. I'm not going to waver yet. I believe that this right now, as I said in the beginning, is just the first step in central banks stabilizing the markets via more liquidity here. What do we know is going on? We know liquidity is drying up. I've been beating this to death for weeks right now. And that's a big part of what we've been seeing here. Global bond yields rising. There's a sell-off here in the debt market, which is the driver of everything. You know these things. Anyway, so as I said, on the back of this here, stock futures are higher across the board. The market's all giddy. Oh yeah. more easy money. 10-year yield $3.25 lower. Gold and silver catching a bid. Bitcoin back over 21,000. Crypto's catching a bid. Very nice right now. Crude oil higher. Okay. That's how these things are playing together. Look, what we have here, you and I, is a game with multiple facets to it. And in order to stay ahead of it, you got to put all these things together. You got to say, okay, this is going on, and then this is happening, and they're trying to tell people this, they're distracting people with that, and try to come up with the most likely scenario. And in my view, and in most of your views, because I do read the comments, central banks are going to do more. And I really believe that what we're seeing right now with the ECB, standing ready to supply liquidity to the banks. And I want to hear from you. What do you think about this? Do you believe this is a backdoor bailout, a front door bailout? What is this that the ECB is standing ready? And do you believe, as I do, and I think you probably do agree, that the Federal Reserve will also follow suit? It's interesting how this works. We've seen it time and time again. The ECB, the European Central Bank, institutes some kind of policy. And then the Federal Reserve just, follows. They follow what the ECB is doing. I find that an interesting dynamic. And I want to hear from you. Why do you think that is? Why do you believe that the Federal Reserve follows in lockstep with whatever the European Central Bank is going to do or is doing? I don't know. I think that's kind of an interesting thing, but it's something else that we need to consider. So understanding, let's put another perspective on this real quick. If you and I realize, and like I said, I want you to look this up, okay, with the European Central Bank standing ready to supply liquidity to the banks. So just put that in your search engine there. With this mechanism in place, and I believe it's going to be followed up by more debt buying, how do you believe that is going to affect the global debt bubble? In my opinion, it's going to, and it should be pretty obvious, it's going to inflate a lot further. Inflation is going to surge higher faster as well. And I think the real takeaway here is, well, what you and I have been doing since like forever now, betting against the debt, becoming your own central bank, holding hard assets. My favorite of all time. What's my favorite of all time? There it is. There it is. Physical silver. Do your own research on this, people, but it's the most undervalued asset on the planet, off the planet, or anywhere else you want to look. That's just my take on it. And it's just so simple. What am I going to tell you? Look up the Dow gold ratio, gold silver ratio, and you will see why I am saying this. Look, there is no way, again, on the planet, off the planet, or anywhere else, that they can continually and forever push off a bursting of the global debt bubble. This supplying liquidity to the banks issue, and the Fed's going to follow suit. All this is a way to kick the can down the road. Kick the can down the road just a little bit more. But eventually it's going to melt down. And it's going to melt down by design here. Again, I've explained to you that moment of maximum saturation where I believe this whole thing is going to come down. The moment of maximum saturation, that's my little thing I've come up with here, is again when the effect or the side effect of inflating global debt becomes so great we're seeing it right now, surging inflation on a global level, that it just, there's the law of diminishing returns. And that's exactly what we're seeing here. But again, they don't care. They will inflate and they will crush an entire class of people on a worldwide scale. And I'm talking about the middle class on the back of it. They don't care. You understand? So I want to hear from you. What do you think about this? Backdoor bailout, front door bailout, in your face bailout. This is, reliquefying the banks because the system is illiquid. The debt market is clearly illiquid. The banks are insolvent too. They all operate off a fractional reserve, and there's no cash there. It's you put your cash in these institutions, it just miraculously disappears, and it becomes their property. By the way, okay, so you might want to look into that. By the way, all right, look, I'm out here. Something important here. I may not be able to do a post-market wrap-up today. If I can't do it today, I will do a post-market wrap-up tomorrow, okay? So you're not going to miss out on this, all right? I love being here. I love being here with you. So in the event that you don't see me at the end of the day today, I got something I must take care of and I can't get out of it. At least I'm going to try to get out of it or skirt around it. So you may not see me today. In the event that you don't see me today, let's leave off with my favorite 3 things, okay? Love each other, care about each other, be charitable. Either way, you're going to see me tomorrow for a wrap-up of the festivities of the day, all right? This guy here loves you a lot. Please comment. Answer the questions that I put forth here. Share the video. Get it out there. And I'll see you either later today, or I definitely will see you tomorrow. I'm out of here.